Hi, everyone. This is Matt Curfman and two of my trusty economic advisors. One, the long 2.5-year-old Oliver, you've met many, many times. And then also, this is Theo, his younger brother. Theo is all of about 12 weeks old, and he is learning all about the financial world's headlines. And just like Oliver, when he sees my blue light, the camera come on, he wants to jump in front of it and see all of you and just say hi. So, Oliver, thank you for being here. Theo, thank you for being here. I'm going to set these guys down now. Here, but as always, for those of you who have seen my videos before, thank you for indulging me. People have shared a lot of feedback that they love seeing my pups, so definitely want to throw them on these videos. So I'm going to take just a minute and kind of look at life from a financial perspective in the rearview mirror if we go back and kind of look over the month of July. And then we'll also talk a little bit into the future. So headlines are still really, really loud and really, really noisy. It seems like almost every day, every other day, there is more and more extreme headlines, specifically around a few topics. So one would be Iran, the war. One would be oil as it relates to Iran and the war and how it impacts all of us. Next would be inflation and higher interest rates, and that kind of ties into the Federal Reserve. And so a lot of this is all kind of interconnected. And sadly and unfortunately, it's creating just a ton of uncertainty. So underneath all of those headlines, there's another pattern, another trend, interesting that's happening that we've noticed. So the economy and the labor market remain pretty resilient, meaning things seem to be going okay from a purely economic standpoint. That's what I mean by resilient. However, if you look at stock market leadership, maybe many of you have heard of the group of companies called the Magnificent Seven or the Mag Seven. These are the seven really, really large trillion-dollar plus technology companies. And what you may remember is inside of the S&P 500, the 500 means there's 500 companies, really large companies. Seven of them have an uneven weighting because they're so big. The seven represent almost a third of our entire U.S. market. Historically, the seven have really led the way as far as growth because they're technology based. What we're starting to see is that the leadership within that is broadening beyond the Magnificent Seven. So what does that mean in practical terms? The other 493 companies, which represent other sectors, other pockets of the market, have actually and are doing better year to date from my resources rather than just the seven always leading the way. So what that means is growth is broadening out beyond just the technology. We've talked about this a few times, where as technology continues to evolve, specifically artificial intelligence, can companies gain efficiencies by using artificial intelligence, and it'll start to broaden well beyond just the technology only pocket of the market. There are 10 other sectors, believe it or not. There's 11 sectors in the S&P 500. So next, as we kind of look forward, a question that I kind of think about when I look at all these headlines is, what should you as a retiree or an investor do about it? Big question. The answer is probably less than you think. I think we should just maintain and stay diversified. We should maintain appropriate liquidity. If you are retired and we need to have an income plan in place with you, making sure we have stability and some assets that have nothing to do with the daily movements up or down or sideways in the market. And then just continue to make decisions together based on your plan rather than the newest headline. One of the hardest lessons, I think, in the financial world and maybe the investing world is that the world can feel incredibly uncertain, and yet markets can continue moving forward. And that's such a simple statement, but it feels like a little bit about where we're at. There's a lot of uncertainty, a lot of noise, and markets are still moving forward. So we certainly can't control what the world throws in our path, but we can control whether or not we've worked with you to develop and prepare a plan that can help you navigate through it. So from that standpoint, I feel really, really good. If you have individual questions or you've had a life-changing event, family members change, new grandkids, change of job, looking to retire, maybe you've been retired, maybe you lost a partner, significant other, and you need help just figuring out all of your finances. These are all the things that we work with so many families, hundreds of families on these exact topics. And we are honored to be a partner with all of you who are watching and honored to be a resource for anyone who is certainly considering us. So as we look forward into 2026, we're getting closer and closer to midterm elections, which certainly will cause much more noise, I think, in headlines. And obviously, I believe we all hope that the war and the conflict in Iran winds down, and hopefully eventually oil prices come down. But for now, interest rates are staying a little higher. The Federal Reserve has maintained their status in their meeting during the month of July, did not raise, did not lower interest rates. But we are seeing higher interest rates, and inflation is definitely still here, especially when you look at things like food and fuel prices when we go fill up at the gas pump. So we are here to just continually support you and partner with you along this financial journey. So thank you so much for tuning in. If you are part of the Richmond Brothers family, thank you so much for being part of our family. We are grateful for that partnership. And again, if any questions, our main email is questions@richmondbrothers.com. Thank you.